Hello traders, Damien here. I wanted to do a post-session review. I'm cutting my session short today. I've been bombarded with a lot of phone calls and a lot of distractions. So I'm not going to be actively looking for any more trades, but I did take one trade today and I wanted to post it. It was a 32-point winner, and I wanted to show you a little bit about the order flow and a little bit about what I saw that prompted my entry slightly earlier than I wanted to, and also the way I managed the trade, so that you guys understand the trade management as well. So overall, we came to the market day today, and we saw that the market was still within the main swing of yesterday's high and low, which is the main swing. We covered that in yesterday's video. Had two break-even trades, ended up with 8 points for the day. The market did continue in favor. The market is expected to get above this point, but price action has also been very raggedy, and more than anything has been very choppy and very, for lack of another word, kind of range bound. But it's range bound directional. What I mean by that is even the shorter term order flow is starting to get bullish again. It's starting to have a clear intention, or at least let us know what its intentions are, what it can do. And we see that all signs point to realignment to that prevailing order flow that's expected to climb higher. So coming to the session, the market is still within the range of yesterday's main swing, which is larger. And when we break it down into today, we see that the market has somewhat produced a similar situation than yesterday, but on a smaller scale. Okay, from the intraday perspective, meaning today's order flow, excluding everything else in the past, we can see that the market has produced, or was producing, lower lows in the intraday order flow starting at yesterday, and then the market came up to break that expectation and make it convincing and strong with good momentum new structure high. That's the market telling us that it can intend to move higher. Okay, so as the market came back down, we saw a 100% correction on pretty good volume overall, but we do see some pretty good, or I wouldn't say pretty good, but we do see some attempts of the buyers trying to defend their areas. They just got overrun. Now, why is this? This is like this because the market is overextended without a doubt, right? That's another word for overbought. I don't like to use overbought because it has us looking for cliffs and abysses, and that's not our function here. So the market is overextended. That's going to lead to what? Crappier price action as more people are realizing their profits on the longer term, and other people are getting short. It's going to create a mess of price action, lead to choppy price action, complex corrections, and overall deeper corrections. However, there is a humongous absence of structure anywhere to the left, since we are at highs. Because of that, there's also a lack of confidence in any sustained selling or buying near these highs, which has caused what? Somewhat of a state of confusion among longer term sellers, and an overall testing the waters, if you will, that causes this raggedy and choppy price action. We do see that the buyers are committed still for price to climb higher. We're seeing them defend their areas, and that means it's buying coming in, because at these highs, that could only mean one thing: buying still coming in, trying to absorb the money that's coming on the selling side, which more than anything may be more just some profit taking than actual selling. How do I know that? Because the selling has not achieved anything. And because it has not achieved anything substantial, it only leads you to confirm that it's not active selling, right? Because active selling pushes the market, especially if it overwhelms the people that are getting in on the buying side here, which shouldn't be too many because the market is overextended. So because of these factors, we can assume that the selling that we are seeing is probably smaller term resale trading, or some more of a profit taking, but no huge active selling, because that would have prompted something more substantial than we have gotten so far. Okay, and the market still remains bullish, and the market still is intended to push higher. Okay, so having said all that, I feel comfortable with the intraday order flow wanting to stay bullish as it spoke to us here. Deep correction leads me to, okay, that's reasonable considering where we're at and what this area represents. I just covered all those elements with you, and because of that, I want to see what the buyers achieve from here, okay, before I make a determination as to whether it is likely this expectation fails or is going to continue. Now, let me be clear, an expectation fails when it fails. I'm not here to say that the expectation is weakened and therefore I'm going to filter out my trade. That's not how this works. Okay, but the fact the price came down so deep leads me to believe that the buyers are in some degree of weakness, which they should be in this area. And it may also lead me to the possibility of I'm sorry, I paused the video and I now I don't remember where I left off, so I must maybe take a step back. I'm sorry. All right, so as price comes down to this area, I want to see what the buyers achieve from this move back to the downside. It does not weaken the expectation. It just means what? I'm getting a better risk reward. Do I have to also be informed enough to know that there is some weakness here and the price got to an area that it probably shouldn't have? Yes, but that doesn't mean that we abandon the expectation, that we don't look for a trading opportunity. Okay, I got to the to my trading chart a little late today, so I missed this opportunity here. So when price came back up to the area and I saw that the sellers did engage where they needed to, this area right here became very important to me, and then identified an area of interest. Okay, so I'm expecting for price to make a new structure high, right? I'm expecting for the market to continue to press higher, but I'm also seeing that the sellers are aggressive and are defending and are trying to keep that from happening. Okay, so right off the bat, what comes to my mind? Risk reward, right? I have to have the risk reward, and I want to buy in an area that I feel more comfortable buying because there is a footprint on the chart that says the buyers are still willing to spend money at that price level. Okay, and I drew this little area here, this little cucumber here. Okay, now why did I draw that there, and why would I say that I needed to buy in an area that offered risk reward where the buyers were willing to come in and buy at those prices? Because there is evidence of that on the price chart. Okay, forget about yesterday. Okay, we're talking about today. We see that there was some buying pressure in this area here, which is a little shallow to that, and we see that there are some buyers that tried to come in here. None of that stuff really mattered, but once price started getting a little lower, not only were the buyers willing to keep buying, but also start making a difference. Okay, and as price came back here, we see that they didn't really win here, but they were still interested in these areas here, here, and here. They didn't achieve anything, but at least there's a sign, a footprint there of buying. Okay, and the buying that really made a difference happened at these lows. Okay, knowing that the sellers tried to come in here and failed, and that the buyers defended this, revisited their area and came forward, gave me even more, an even bigger interest of using this area as a valid area that the buyers are willing to defend. Not only that, but on a more immediate scale, in a shorter term order flow, we had a 1-to-1 here that got defended, and that immediate expectation failed. So if anything, now we had realignment of shorter term and the intraday order flow aligning with the overall market expectation, and those are really good things to have, right? You have strength alignment on all three order flows that you're looking for that support your analysis. So that is a good transition for the buyers. So as price comes back into this area, what's happening is we see that every time the sellers come in on a micro scale, the buyers immediately come in to eat up that money. And the same thing happens here. And here, these little tails, what is that? Those are buyers. Okay, those are buyers trying to absorb. Okay, that tells me that they have, or believe to have, enough money and enough participation to be able, okay, to defend such shallow levels. That's fantastic for the trading opportunity. As price started getting to this area here, I almost pulled the trigger on this candle, but the risk reward just wasn't there. I knew that it was reasonable and possible to have price come down to this area. Okay, I also knew that at the very least, any trade that I take to the upside has to have, at the very least, a stop placement below here, and ideally below the overall main swing of yesterday, which we're still within. Okay, but you know, the best case scenario from an intraday risk standpoint said that if I'm right about this, and these highs and lows are going to be defended and protected, and the buyers felt comfortable not only participating here but winning, I really felt comfortable about keeping my stop below here, even though it was slightly vulnerable to the bigger picture, which is absolutely okay. All right, it was a 20 something point stop. I didn't worry too much about that. I felt confident that the order flow would hold based on what I was seeing and how vigorous the buyers were willing, okay, in an area that they didn't have to be absorbing or trying to absorb the money that was on the selling side, okay, leading to what? The sellers wasting money and the buyers slowly absorbing and accumulating over them. Again, these topics will become clear as we keep doing this together and as more lessons come up. All right, so now I was faced with a decision as price entered my area of interest and price did interact, and we see that the candles got really small here compared to these last ones. What is that? That is buyers pouring into the area. Now they didn't absorb, but that absorption somewhat happened in a weak state on the next candle, okay, right here. Well, we have a rotation, okay. So what is a rotation? For those of you that don't know, let me make this a little fatter, okay. So rotation is a candle, okay, that does not trade below the previous one, okay. It's also a candle that keeps overall half of its volume, what this one barely did, and takes out at least half of the previous one. So that is a good rotation. All right, so on the rotation candle, we had a weak rotation here, but it was enough for me to say, you know what, I may be getting into this a little early, and I mentioned it in the thread, but I felt good about it. I did see what I wanted to see overall from the buyers, although it looks like here these scary selling candles were not overall impressive to me. I know they were somewhat empty because after this, if there was really sellers here and it produced this much selling, because remember all of these are all 144 tick candles, so they have the same amount of transactions. If this meant something, price would have moved, and price didn't. The buyers came in to fight it back. So these are just empty candles. These are the buyers playing into the sellers and allowing them to waste the money so that they can buy where they wanted to buy, because the buyers in this case want to do what? If you're a buyer, what do you want to do? Buy at a better price, right? And that better price is what? Lower, okay? So you also need liquidity. There may not be enough liquidity here, so you have to buy in chunks or scale in, if you would. All right, but nonetheless, I got in there. I was willing to assume the risk there and understand that I might be getting in a little early. It turned out to be the case, and eventually the buyers came in and move price higher. Now, why did I trail here? Why did I decide to get aggressive here and start trailing? For a number of reasons. Okay, one, the market is pretty range bound with a slight directional bias to the upside, right? A 1-to-1 here, okay, which is what I was trading, okay, puts price up here. But on a shorter term scale, we have a very clear ABCD pattern that completed here, and a very small term, okay, Garley pattern that completes here, that's bearish in nature. Doesn't fit the order flow, but we have to understand that these are all harmonic and ratio values in an area of an exhausted, I'm sorry, okay, I had to slap myself, an overextended market that may lead to what? This area possibly holding and price being able to come down. I've also been very distracted today with a lot of phone calls, and I decided to get aggressive and to trail at the 390, which I also posted in the thread, as it is the completion and 1-to-1 extension of this area, okay, which overall has held now for a couple of days. Okay, for those factors, there was a strong developing area of supply up there, okay, and a increasingly unstably over extended market. I decided to get aggressive and trail on those premises. Okay, so sure enough, the market came in and took me out. Now, had I been wanting to stay trading, had I wanted to continue to trade here, in all honesty and fairness, my trade plan would have had me looking for a long again, and I possibly would have engaged here, and that would have been a loser. I can't tell you that I would have or that I wouldn't have. That would be an improper comment for me to make, because one, the information is there already, so it's easy to make the argument one way or the other, and that wouldn't be fair to you, to the channel, and to everything that we look to achieve here, which is complete transparency. I am here to tell you that my trade plan would have put me in a trade somewhere in this area, and I probably would have lost. Okay, that's honesty, that's full disclosure, that's transparency for you guys. Okay. Nonetheless, I didn't take the trade. I needed to get this done because I have a mountain of things to do today, and I wanted to put this out earlier than yesterday's. And we had a 32-point gain today on the intraday. The long term is still in untradeable territory. We'll see if that develops later on in the week or maybe early next week. But we're sitting on very good profits for the month, and we can afford to take a little bit of a break from the longer term until it gets into better trading territory. Thank you very much for your time. I know this one's a little short, but it's sweet, and we'll continue to do this on a daily basis. Okay, guys. Thank you very much for your time. Thank you for the support. And there are going to be some changes coming down the pipeline with the YouTube channel and stuff like that. Like I've mentioned, some other things are developing behind the scenes. Don't know exactly where they're going to head, but at the very least, the content will stay, and then everything else will probably follow to some extent. Thank you very much, and good trading.